Welcome to Dinar Stories, a channel created for people who seek understanding, not just excitement. If you're watching this video, it means you're willing to slow down, look past the headlines, and listen. Today's topic is sensitive because it involves money, powerful expectations, and a lot of emotion. Many people have already labeled recent developments from the Central Bank of Iraq as bad news. But labels without understanding can be dangerous. This video isn't here to scare you, excite you, or push you toward any particular decision. It's designed to help you understand what is happening, why it's happening, and what it realistically means for the road ahead. Let's start with what people are calling bad news. That phrase, CBI, bad news, has been circulating widely, but if you ask most people repeating it, they can't clearly explain what the news actually is. In reality, this so-called bad news refers to tighter controls, stricter rules, and stronger oversight by the Central Bank of Iraq. This includes more documentation requirements for transactions, shutting down unofficial pathways for currency exchange, and the CBI asserting its authority over how the dinar is handled. For emotionally driven observers, this feels like doors are closing when they expected them to be opening. But it's crucial to understand that restrictions do not automatically mean rejection or failure. In financial systems, strict controls often appear just before stability is achieved, not after a collapse. So why do central banks impose such strict controls in the first place? Central banks exist to protect their national currency, not to create excitement or promise profits for holders. Their number one job is to maintain trust, stability, and credibility in the monetary system. When a currency has a history of instability, sanctions, and misuse, the central bank has to be even more cautious. Loose systems are an open invitation for corruption, uncontrolled speculation, and international distrust. This is exactly why central banks will always choose control over speed and discipline over excitement. What feels frustratingly slow or restrictive to an individual is often a necessary step for long-term national stability. This brings us to why so many holders perceive these controls as negative. Many people who hold the dinar entered this space during years filled with unverified claims and completely unrealistic time. Repeated exposure to phrases like any day now and guaranteed changes has shaped expectations on an emotional level, not an institutional one. So now, when the CBI communicates in its typical neutral, cautious, and controlled language, it clashes directly with those high-flying expectations. This creates a deep sense of disappointment, not because something real was actually taken away, but because a fantasy was removed. The hard truth is that real financial systems do not operate on hope or a sense of urgency. They operate on documentation, structure, and meticulous risk management. Now, let's talk about the real risk the CBI is trying to prevent. The single biggest threat to any currency reform isn't delay, it's a loss of control. If a currency becomes associated with scams, secret insider claims, or unofficial Bacali exchanges, its credibility collapses almost instantly. Major international banks and global financial institutions do not tolerate ambiguity or markets driven by rumors. They demand clarity and regulation. The CBI understands that even small perception problems can permanently damage long-term reform efforts. That's why it moves so carefully to shut down unofficial narratives and reinforce its own authority. This isn't hostility toward holders. It's a necessary act of protection for the currency itself. This leads to a crucial point about what these restrictions actually signal in the world of finance. Think about it. Institutions don't tighten control around assets they plan to abandon. They tighten control around assets they intend to protect, normalize, and eventually integrate into the global system. If the Iraqi dinar were truly irrelevant, the CBI would simply ignore it and let it fade away. Instead, what we see are clearer policies, stronger enforcement, and more administrative consistency. These actions require significant time, money, and effort resources that are never wasted on a dead or dying system. This is a key signal of intent that many people completely overlook because it doesn't fit the exciting narrative they were sold. And here's the twist that most people miss. It's simple, but incredibly powerful. Preparation almost always looks negative before it looks positive. Before a system can open up to the world, it first has to close all its internal loopholes. Before you can have flexibility, you must first build a solid structure. And before you can have international integration, you must first achieve domestic compliance. The CBI's current behavior fits perfectly into the early stages of establishing institutional readiness, not abandonment. This is not a confirmation of any specific outcome, but it is absolute confirmation of seriousness and intent. This is also why the phrase "no promises" is actually a sign of responsibility. People often complain that the CBI doesn't give any timelines or guarantees, but promising specific outcomes before the underlying systems are fully ready would be reckless. It invites massive speculation and allows manipulators to take control of the narrative. Central banks that announce their plans too early often lose control of their own process. So, for now, silence and neutrality are strategic tools, not weaknesses. Real, actionable announcements will only happen when the systems are robust enough to handle the public's reaction. Until then, the quiet work of preparation continues. So, what does all of this mean for holders right now? The correct position is not action, but awareness. There is absolutely no need to rush, panic, or chase down every new piece of information. The most responsible approach is to keep your currency secure, documented, and ignoring any message that tries to create a sense of urgency is the best way to protect yourself from scams. If and when legitimate exchange processes appear in the future, they will be public, official, and regulated. Nothing real in the world of finance ever requires secrecy, pressure, or a special insider deal. It's also important to understand the fundamental difference between emotion and institutional systems. Financial institutions are specifically designed to eliminate emotion from the decision-making process. They do not react to excitement, fear, or social media trends. They rely on policy, compliance data, and risk assessment. When emotions run high in public spaces, institutions typically slow down even further to avoid making mistakes. This is why emotional reactions often end up delaying progress instead of accelerating it. A calm, observational mindset aligns much better with how these systems actually move. Unfortunately, whenever attention increases around a currency, scammers inevitably follow. They are experts at exploiting confusion, hope, and the lack of official clarity. Fake insiders, special early access offers, and so-called guaranteed rates are all common tactics. Remember this: real banks will never contact you individually with a secret opportunity. Official changes are always announced publicly, transparently, and consistently across official channels. Anything else should be treated as an immediate red flag. If we zoom out and look at the long-term pattern forming in Iraq, a clear picture emerges. Over the last several years, the country has been focused on comprehensive banking reform, promoting digital payments, and aligning its financial systems with international compliance standards. These efforts are slow, but they are deliberate and intentional. Enforcing currency discipline is a critical part of this broader modernization strategy. You must have strong internal systems in place before you can successfully integrate with the international community. This pattern suggests a focus on structural, long-term growth rather than quick, short-term fixes. History shows us that durable, lasting reforms always take time. This brings me to my final point. Patience is a strategy, not a weakness. In finance, patience is often misunderstood as just sitting around and doing nothing. In reality, strategic patience allows complex systems to complete the necessary groundwork. Rushed reforms almost always create instability and public backlash. Controlled, methodical reforms are the ones that build credibility and long-term sustainability. In this environment, those who are willing to wait and observe are often much better positioned than those who rush in based on emotion. Preparation always comes before opportunity. So, let's reframe the so-called bad news. The current actions from the CBI are not bad news for serious, patient observers. They are bad news for rumors, for shortcuts, and for misinformation. Strong systems must first remove fantasy before they can create real, lasting stability. This phase is about establishing control, not celebration. Understanding this distinction is what will help you remain calm and centered while others react emotionally. At Dinar Stories, we will continue to focus on structure, not speculation. Thanks for watching, and we'll see you in the next video.